welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading strategies as well as a setup in the trade as well that you must know about the markets today. We'll start off with a recap as always. Once again, it was the bears that ruled Monday's trading session yesterday and the Nifty fell below 24,700 amid the rising weakness in the Indian equity markets. Remember, the Nifty experienced its third consecutive session of declines. In fact, in the last 3 days, we've actually seen the markets lose about 13 lakh crore rupees of market cap as well, denting the sentiments across the board. We also did see the broader markets, mid and small cap indices continuing to underperform the benchmark indices as well. And of course, the earnings disappointment also continued to dent the sentiment across the board. We also have not seen any bright spot among the earnings yesterday. And of course, it was the TCS-led job losses news coverage that also dragged the IT stocks more. Now, of course, for today, tariff and trade headlines will continue to remain on top of the mind as we near the August 1 deadline. Remember, all eyes on tariffs on India, Korea and Taiwan will be important. These make up for 10% of US imports as well. In fact, what Donald Trump has already indicated is another, shocker. We are actually now listening to Donald Trump, who's saying that 15 to 20% baseline tariff will take place for countries that don't make a deal by August 1. And remember, India has not struck a deal yet. So will there be the risk of a 15 to 20% a baseline tariff, which right now stands at 10%, is something that we will get to know about. Now, of course, Donald Trump also did mention that he is intending to impose 100% additional tariffs on Russia's trading partners in the absence of a ceasefire with Ukraine as well. So Russia is being pushed by US to ensure there is a ceasefire on the war with Ukraine. Unless and until that happens, on the trading partners of Russia, say, for instance, India, that also imports oil from Russia, will also face the risk of 100% additional tariff, is what he is saying. So that's something that we will be looking at again. Now, Donald Trump has also said that they will be announcing the pharma tariffs very soon, and they also have a big plan on pharmaceuticals as well. They want to bring the pharma space back to America, pharma production, manufacturing, and the pharma business back to America is what he intends. Now, he also did all of this statement did lead to the US stock markets also flattening out towards the end of the session, even though the S&P 500 did open up the session with record moves, but towards the end we did see the US markets also flattening out in trade. There was also another reason for this, and the reason is that the Fed decision this week also looms large as to what will happen on the rate cut. Will there be the pressure that Donald Trump and his government has been mounting on the US Fed to cut rates? Will that be an overhang on the decision? Will we again see a no rate cut? And what that ends up doing is also something that we will be watching out for. Asian markets this morning again slipped after a flat session on Wall Street as investors stayed cautious amidst the week that's packed with economic data and corporate earnings as well. The MSCI Asia Pacific gauge also dropped by 0.6%, a third consecutive day of decline. So you can see China, Hong Kong, both of them are down. Hong Kong is down by nearly 0.9%. Now, Japan, you can see Nikkei also falling by nearly 1%. Kospi, however, is holding up about half odd percent, 0.6% higher. But again, look at the gift Nifty. There is again a sense of weakness and a softer opening. 0.2% lower, 0.1% lower is what we could be looking at. Again, at 24,665 is what we could be probably seeing in the markets. Now, for the Indian markets, there is also another data point that we are looking at, and that's with regards to the June IIP data as well. Now, for our macro indicator on the industrial production data, which has come in at a 10-month low, is another negative. And the June IIP has come in at 1.5%, vis-a-vis 1.2% on a month-on-month basis. There is a slight uptick, but you do see that, mining and electricity output was definitely subdued. There could have been some impact of the monsoons as well. Manufacturing growth has seen just a marginal pickup versus May, although we will now see how the markets really perform after this macro data and the micro data that continues as well. Remember, the markets have also been been continuing to drift lower in the absence of any earnings spark. And of course, the FPI selling that continues. Look at the data yesterday. The foreign institutional investors net sold into the market 6,082 odd crore rupees of shares in the Indian markets. Now, this was definitely offset by the domestic institutional investors that again net bought stocks worth about 6,764 odd crore rupees. But the FII selling continues unabated, and that's something that we are looking at. Again, when we point out to two other factors that we really need to watch out for is the commodity and the currency aspect as well in the trade setup. Now, what happens on the oil front? Oil prices have been holding on to the gains after President Donald Trump in the US has pushed for Russia to reach a swift truce with Ukraine or actually potentially face economic penalties, raising concerns that crude supplies from the OPEC plus producers could also be disrupted. Now, West Texas Intermediate, that's the WTI crude, that was hovering around $67 a barrel after closing 2.5% higher on Monday as well. Brent crude prices, they settled near $70 a barrel. So that's something that we will be looking at. What happens on the currency front? The US dollar that jumped the most since early May, putting it on track for its first monthly gain this year, as a trade deal between the US and the European Union has renewed some fears about the impact of tariffs on global growth and on inflation as well. So that's another aspect that we could be looking at. Now, of course, dollar is still down significantly from the start of the year. The gauge of the US currency has gained about 1.5% in July so far. So we need to keep in mind as to how the dollar is moving and what happens thereafter, on the currency front as well, which has so far been away from our side. What happens on the domestic front? Which are the earnings and the companies that you should be watching out for? But let's first look at the Nifty. Look at the sharp fall that we're looking at the first pre-open trade. 425 points of a decline on the Nifty in the pre-open trade. 24,240, 24,300 now. This should improve for the better because this definitely does not look good. 1.5% losses coming in for the Nifty, and it slipped below 24,300 in the initial part of the pre-opening trade as well. This definitely should be settling for the better, and we will again track it as soon as we look at 907, 908 when the markets settle down after this initial knee jerk. Of course, we are seeing US markets falling, Asia markets also down in trade, but a reaction like this is definitely not warranted. But let's look at some of the stocks and the key earnings that we will be watching out for today. IndusInd Bank, that's the first one. The bank has posted a 72% drop in net profit on a year-on-year basis. That's fallen to 604 crores for the quarter ended June of 2025. That's down from 2,171 odd crore rupees in the same quarter last year. That's something that we will be watching out for from the banking space. Look at IndusInd Bank. It's already indicating a 2% uptick. Why is that? Despite a 70% drop in the profit, well, it's slightly better off than what the street was estimating. Most of the street analysts were estimating 85 to 95% kind of a drop in the profitable figure. So that's something that is also penciled in. We also do not have any fresh shocker coming in from IndusInd Bank, and that's also easing some amount of pressure. We will also be looking at defense names like Mazagon that's come out with the earnings. It's reflected a 35% year-on-year drop in its consolidated net profit for the June quarter, reporting it at 452 odd crore rupees. Let's now welcome our guest on board. We are now joined by Mr. Dharmesh Kant. He's the head of equity research at Chola Securities, and he's joining in to share with us his views on the markets. Warm welcome to you, Dharmesh. Good morning, and thank you so much for taking the time out. This morning again, it's the tariff headlines that are looming large, and we have many statements from Donald Trump, talking about higher tariffs. One, he said that all the countries that have failed to strike a deal will risk a higher tariff of 15 to 20% baseline tariff starting August 1. India still does not have deal yet, and we could fall into that category. Two, he has said that if there are countries who have associations with Russia, in the absence of Russia attaining a ceasefire with Ukraine on the war, there could be additional penalties of almost 100% additional tariff on the countries that have associations and deals with Russia. Like India imports a lot of oil from Russia, so again we fall into that category. The third key headline that he has talked about is the pharma space, that he is again threatening that he is coming up with big pharma tariffs, and it could be coming in soon. How are you looking at these fresh statements, sir?
Yeah, good morning, Sakshi. I mean, all these headlines are not conducive to the market in which we are functioning right now. And 15%, I think that that's the baseline tariff even after negotiation. That will be the norm, because that is what he has negotiated with Japan, European Union, and UK. So in line with that, India will also face the same. Other Asian countries, if you look at Indonesia or Thailand or Vietnam, they are facing much higher tariffs, to 15-20% kind of a range. So the only leeway which India can have is around 15 to 20% kind of a range. The problem arises if he goes ahead and imposes, 100% kind of a tariff on countries who are doing bilateral trades with Russia. That's definitely a gray and a problem area for us in the short term. But given the other news flows and the officials speaking about India and the way they are sugarcoating their words, it seems like there would be some scapegoat for India for at least 1 month or so, and thereafter things will be decided. And given the fact that they are already anti-China, so that also will play a big part, because India is a big economy in the Asian market, so they won't be disturbing that. So let's see. Net, the headline news on the global front doesn't seem to be supportive of the market correction, which is already there. I mean, it will further lead to more market correction. Having said that, the other disturbing factor has been the earnings so far. So we did an earnings analysis of around 150 companies on an aggregate basis, which is ex-BFSI. The negative surprise is the operating profit itself. 37% of the companies returned negative return on the operating profit. Forget about profitability. And wherever PAT numbers was good, it was more to do with the other income component, which played a good part. This was more or less expected. What was unexpected was the kind of management commentaries and body language and the guidance which has been given by most of the companies, and they are very lackluster to cautiously optimistic, if I may use those two words, is the norm. So a difficult Q2, and the way Kotak Bank guided that S2 should be some soothing effect. So that means Q2 has also gone, and the type of provisioning all the banks have done, that is reflective of the economic trend in the country, which is as of now more of a transitory kind of a consolidation phase. So be prepared for 1 more month of volatility with negative bias on the market. That is what it looks like. Eventually, we are bargain hunters, we are cherry pickers in this fall. So whatever incremental new flows are there, we are going for stock specific kind of a place where we are advising our clients to buy the dip.
He got that. So, two very important points made by Dharmeshji. One, the global headlines are not conducive to the market sentiment at this point in time, and one has to just continue to wait and find out whether there is any improvement in these statements, whether there are any signs of a deal being signed with India, because only then can we look at any improvement. The second one is on the earnings disappointment that continues and could continue for one more quarter as well. Those are the two big, highlights from Dharmeshji's commentary. 60 points down in the Nifty 50 as far as the pre-open trade is concerned. This is much more sensible to look at than the initial pre-open tick that we saw, 24,618, but there could be another soft opening is what we are given to understand. 0.25% down right now is what the indication is. Since you're talking about the earnings, we'll start off with IndusInd Bank, sir. What's your thought after the earnings that have come in? 72 22% of a drop on the profitability figure. But although no fresh shocker that has come in, there is also some indication of an uptick on IndusInd Bank in the pre-open trade as well. Slightly better off than what the analysts were expecting on IndusInd Bank's profitability to drop by almost 90%. How would you look at the bank now? Will this feature on your again watch list, or would you still wait it out till the time all the financial troubles get past us?
Actually, there are too many moving vectors in IndusInd Bank. First is the people who are running the show. They are leaving the company. CHRO was the last, which I know is, which was known to through the news flow. He has also resigned. So things like this doesn't augur well for a company which is already on a troubled board. Numbers was bad. There were no two ways about that. People may try to find out some green shoot that the expectation was 75% kind of a fall. It fell 72%. But anyway, there has been a big decline. Business wise, they have not been doing well. And I think it will take some more time. Till entire audit and everything is through. 2-3 quarters will be lost in consolidating the bank, and in that time, meantime, you will lose the business to your competitors in a big way, and that is what is the So for IndusInd Bank, I further damage in the stock price may not be there. 5-7% cannot be ruled out, but beyond that, I don't see it going down. Because the people who are now sitting in it as an investor, they are sitting it for a long haul, for 3 to 5 years kind of a time horizon. So that way valuation looks pretty attractive, but I would suggest that wait for one more quarter, let Q2 also pass, and then take a reasoned call on whether to go for an investment by your IndusInd Bank or wait it out, because there are plenty of other opportunities available in the same basket where you can get a much higher and better returns with a clear visibility as to the next trajectory.
Okay, fair point. The markets have settled in the pre-open trade again. We could be looking at a softer start, 0.3% lower in trade for the Nifty. All the sectors could be opening lower by almost up to 0.4% down in trade. Media and FMCG stocks could be showing us some green ticks, but the gains are far and few between as well. Looking at the Nifty, you could see Adani stocks like Adani Enterprises in positive focus, TCS, BEL, HUL, Eicher Motors, Adani Ports, Bajaj Finance as the ones that could be holding higher, but metals seem to be dragging today. They could also be the banking names that continue to reel under pressure as well. We'll come to that again. But let's also talk about furthermore earnings. Mazagon Dock is something that I wanted to discuss with you again from the defense pack. One of the other earnings that are coming in, and already we've been seeing some indications from a BEL and other earnings that were coming in that this quarter has not been very exciting for the defense majors. Again, for Mazagon Dock, we have seen that in the pre-open it's dropped by about 3.5% odd as a reaction to the 35% year-on-year drop in its net profit for the quarter, that coming in at 452 odd crore rupees again. How would you look at defense stocks coming up with the earnings, and what would you say for Mazagon Dock now?
Yes, actually, defense stocks, the basic mistake we all do is looking at on a quarterly basis, because for Mazagon Dock, it's a builder kind of a company. One ship takes more than a year to be built. Same is the case with aircraft and others. So, but there are few companies which are into an EMS space in the defense basket where the turnaround is far faster. But I will just give you one sample data. The entire 13, 14 listed companies, if you look at the top line of these companies for last year, around 68,000 to 70,000 odd crores was the top line of all these companies put together. The heavy lifters were HL and BEL, which together put around 50,000 odd crores of top line. And the entire order book of these companies, which stands as more than in excess of 3 lakh odd crores, around 3 lakh 6,000 odd crores is the order book. So the visibility of book to bill ratio is almost 4 to 5 times kind of visibility these companies are sitting on, and these are long gestation period kind of order flow. So keeping that in mind and seeing those kind of a visibility, there is better way if you actually want to look at it on a yearly basis rather than on a quarterly basis. So my own sense is you should not even be looking at yearly basis. At least give it a 2 year kind of a window for these large orders to be executed. From that point of view, I think all these corrections which are happening in quality names in the defense space, be it BEL, HAL, or a Mazagon Dock, are a good opportunity to accumulate if you have missed the bus earlier for a long-term trajectory. But be mindful of the fact these investments are not for a year or so. If returns come by, your good luck. Otherwise, if you are willing to wait for 3 to 5 years, they are a multi-baggers from here.
Okay, got that. So that's the overall defense overview that you've got from Dharmeshji. Let's also welcome Arpit Beriwal now joining in on the program with us to share with us views on technicals. He's the analyst for derivatives at Wealth Management, Motilal Oswal Financial Services. Arpit, warm welcome. Good afternoon. Good morning to you. Tell me about your own take on the markets right ahead of the expiry, the monthly expiry, series expiry that's coming in. Thursday is when we see this otherwise a very lackluster expiry, kind of a month that has panned out to be. And we are only drifting lower. We've tested so many levels in this just last 1 week alone, from 25,000 to now almost closing in on 24,600. How do you see the markets panning out? Arpit, could you hear me at all? Okay, I guess there is some technical issue. We'll again try and come back to Arpit on the same and try and understand from him what exactly can the markets trade pan out like for today and for the rest of the week as well. But we'll also ask Mr. Dharmesh on the Adani Group stocks now. How have you been looking at this space? There have been some upticks across the board, and earnings have been also coming in today. We are seeing a reaction on Adani Total Gas. The company has posted a 21% surge in its revenue, now reaching at 1498 odd crore rupees as well. How would you look at some of the earnings that have panned out?
Yeah, earnings have been, picking up for the Adani Group, or even on the revenue front. The only question to be answered is whether the valuations are justified or not. So there, I mean, it becomes very difficult to pick up the fundamental picks or the choices out there. Still, I think Adani Ports offers a good value to the investors, even at current valuation multiples, and there the business has been very strong. So I have two companies which we are looking at into the Adani basket. Is one is Adani Power, and the other is the Adani Port. Other than that, things have been moving up in the other basket companies in the Adani Group, but valuations are not that great or lucrative for us to look into it from a investment perspective. So we are avoiding them. But yes, Adani Port and Power, one can look into buying that.
Okay, fair point. Arpit is back with us. Morning, Arpit. Your trade picks for the day?
Very good morning to all. So if you talk about the overall market-wise, from last couple of days, we have seen good selling pressure across the market. So few sectors are holding well, while few sectors are underperforming. So one would be on the buy side, one would be on the sell side. First on the buy side would be PAYTM. So if you look at the overall chart structure of PAYTM, it is holding well. In spite of market, mid cap, small cap has corrected. PAYTM is looking very strong on chart on the weekly and the monthly basis. On the daily scale, it is holding above 1050 levels. That clearly indicates the base of the stock is shifting higher, and we can expect good momentum towards 1150, 1200 positionally from a 2 to 3 weeks perspective. So PAYTM would be on the buy side with stop loss of 1050. Second on the weak side would be from the railway. So overall railway stocks are looking quite weak, and we have seen a breakdown on the railway stocks on the majority of the counters. So within that RVNL, if you look at the chart structure on the weekly and the monthly setup, a range breakdown on the daily scale below 365 levels, and we can expect good weakness from here on also. RVNL right now is around 355. So one can short sell around bounce near 360, 362 levels with keeping stop loss of 370 for a downside move towards 335, 330 zones.
Let's look at the market opening. We are down by about 50, 55 odd points right in the opening. 24,628 is what you're looking at on the Nifty today. The only gainers among sectors are oil and gas that strengthened yesterday too, FMCG, Pharma, and just about an attempt of PSU banks to come into the green. But look at the IT space. Again, another half odd percent of a decline today. Broader markets reeling under pressure too, half odd percent decline for small caps. Consumer durables, banking space, financial services, real estate, that continues to reel under pressure. Let's look at the market movers on the Nifty. Nestle, JSW Steel, Jio Financial Services, Adani Ports are the top movers on the Nifty today in the opening, whereas on the declining side you have names like BL that continues to reel under pressure after the dismal earnings. Infosys, Eternal, that continues to come under some pressure. Wipro and Shriram Finance, they also continue to be declining. On the F&O aspect, Tata Chemicals, GAIL India, Lodha Developers are the movers on the positive side, whereas on the downside, Mazagon Dock Shipbuilders post earnings in F&O has dropped by 4.5%. Piramal Pharma also post earnings has dropped by nearly 4%. You also have some green energy, renewable energy names in focus. Inox Wind is down in trade by about 2%, and we also have in focus NTPC Green and Wari Energies post earnings as well. Let me just reiterate for all our viewers what the earnings have panned out to be. Now, of course, for Wari Energies, as we do see that the company has closed the quarter with a healthy 30% revenue growth, margin seeing an expansion of close to 6 percentage points from 22.5% to 22.5% from about 16.2% earlier, and EBITDA has seen about an 80% growth on a year-on-year basis. The management also expects this figure to be between 5,500 crores to 6,000 crores for the full year. The order book at the end of the quarter now stands at 25 gigawatts worth 49,000 crores, of which 41.3% is from the export market for Wari Energies. So that's why the stock is higher in trade. Remember, later on in the afternoon, you will also hear from the management on the earnings that have come in on the channel. NTPC Green, the demerged entity of the state-run NTPC that still trades around or below its IPO price, has reported a 17% growth in its top line and EBITDA each. Margins have remained stable at 88.6%. Profitability during the quarter has increased again, something that Dharmeshji was pointing out, that most of the earnings are being aided by other income. Dharmeshji, the renewable energy names, Wari Energies, NTPC Green, Inox Wind, SJVN, Suzlon, what's your overall view? And from the earnings that are coming in, what is the biggest indication?
I mean, the earnings have been far better than what the expectation was on all the renewable energy funds, and they have been reporting very good set of numbers. Basically, what they have guided for earlier, I mean, that is being delivered into the quarterly earnings update. Order flows are very strong for all of them. I mean, we have a coverage on two of the companies. One is NTPC Green Energy, and the other is the Wari Energy. So, coming to NTPC Green Energy, earlier there was some delay in the land allotment to them, and because of that, the projections which they have given about commissioning of new capacities for independent power producer was getting delayed. But I think this year it's now things are getting speeded up, and they are back on track. So around 6 gigawatt of additional capacity will be installed, which itself will double their capacity from where they are. So we are expecting more than double the jump in the profitability by end of FY26, and almost 3 to 4 times in FY27. So that trajectory remains intact. Wari Energies have earlier guided for around 5,500 to 6,000 odd crores of EBITDA for this financial year. I think they are on track, though the asking rate will be far higher for Q3 and Q4, going by the way the Q1 numbers have been reported. But they are sitting on a very large order book. And they also have a plant in US, Texas, around 1.6 gigawatt plant is there, and 1.6 gigawatt the board is cleared for commissioning of further, so it will take to 3.2 gigawatts. So any, I mean, tariff-related issues gets negated with their presence of manufacturing facility presence in the US market. So again, if you look at the projected numbers, the stock looks pretty cheap compared to its counterparts in the same basket. But overall, I mean, things are being delivered on the renewable energy segment, and this is the space to be in for next 2 3 years, depending upon your pick of the choice of the company which you are looking at. We are looking at Wari and NTPC Green Energies.
Okay, got that. That's the overview on the renewable energy space. But let's look at IndusInd Bank again. The stock is now higher, 1.8% up at 816 post earnings. Arpit, how would you trade IndusInd Bank post earnings?
Actually, if you see overall IndusInd Bank, the chart, the stock is in a broader range. From where, if you see from last June onwards, where the rally started from 800 to 900, the stock is back to its previous support zone, around 800 levels. So if I look at the weekly setup, still it's in range between 800 to 850 levels. So if someone wants to play a contra bet, so definitely one can buy at this levels with keeping stop loss of 799. for a bounce towards 830, 840. But if you look at the bigger trend of the stock, it's still in pressure. So from a trading perspective, if someone wants to play a bounce of 2 to 3%, that's a different thing. With a stop loss of 795, 798, one can play on the upside towards 835, 840 levels. But the bigger trend of the stock is still in pain. And we suggest that over from the private banking space as a whole, we are definitely more positive on the ICICI and HDFC Bank comparatively. So bigger time structure, ICICI, HDFC and banks are better. From a short-term pullback move, one can play with IndusInd Bank with a stop loss of 795.
Okay, got that. I hope this has also given you some sense. Oil and gas and metals have improved now. The commodity space is buzzing. You also seeing some pickup happen on real estate after that sharp 4% drag yesterday. FMCG and Pharma are the other stocks that are hovering higher. Dharmeshji, Pharma space next. Let's focus on that. How are you looking at and reading through the numbers that have come in thus far from the Pharma pack, and what would you do with the Piramal Pharma, for instance, that's come in after the earnings, sir?
See, Piramal Pharma earnings I have not looked at, but other pharma companies which I have looked at, the numbers are not that encouraging. I mean, yesterday Laurus Lab was there. I mean, much talk was done, but you have to take it with a pinch of salt because earlier also management has guided for great numbers, and the company have slipped more than climbing up to the expectation. And for last 3 years, I mean, 21 they made a high of around 700 on a stock price with 18 rupees of an EPS. That translates to 38 kind of P multiple. Right now, you are sitting on 9.5 rupees kind of an EPS with a PE multiple of more than 95 on expectation that operating margin will climb from 20 to 23% to 22% kind of a range, which looks unlikely. CDMO kind of a business margins, and with Mr. Trump citing pharma tariffs, see, tariffs will definitely come, whether it is 5, 7, 8% or 30%, we don't know, but there will certainly be increase in the tariff, which will increase the cost of all these manufacturers, whether it is CDMO, API, or generic or patent drug manufacturer. Some impact will definitely be there. So, to my mind, that kind of a margin is very unlikely. And with this kind of evaluation, we have been suggesting for traders to take profit rather than getting invested. So overall, lackluster set of numbers was there in the pharma companies, but much depends on the first draft of this tariff structure, which he is promising that Mr. Trump that this month they will come out in the month of August. So let's see that. But as of now, nothing positive on the numbers front to look into and jump the gun.
Okay, so not very encouraging to look at the pharma numbers that are coming in that would prompt investors to probably look at it afresh with a vigor. Arpit, technically, is anything looking good within the pharma pack?
Sakshi, if we see overall pharma from last couple of days, if we see as we are seeing relentless selling in the majority of the sectors, pharma has come to the rescue and kind of a defensive sector that has come into picture. So few pockets such as first would be Torrent Pharma. So after its numbers also definitely, if you look at the technically, it was consolidating on the monthly scale from last almost 11 months. A classical range breakout above 35-50 levels on the monthly scale, the weekly scale forming higher highs, higher lows on the daily scale today after gap up opening holding well. So I think from a positional perspective, Torrent Pharma is in clean uptrend, and definitely from 3 to 6 months perspective, we can see good levels towards 4,000, 4,200 plus levels going forward. Second would be Cipla. So if we look at the chart structure of Cipla from last almost 3 to 4 months, the stock was consolidating between 1500 to 1570 levels. Finally, on the weekly scale, it has given a range breakout after almost 14 weeks above 1550 levels, a strong bullish candle. Today it's consolidating a high levels, but the good part is that it is holding above its previous hurdle zone, that is 1550 levels. So I think slowly, steadily, we can see a good move towards 1620, 1650 levels going forward. So Cipla and Torrent Pharma looks good. Torrent Pharma would be a positional call from a 3 to 6 months perspective. Cipla would be from an immediate perspective for a couple of weeks with the near support around 1530 levels for an upside move towards 1620, 1650 zones.
Okay, hold that thought and keep looking at the markets, Arpit. In the meanwhile, they're turning green, and we will try to understand from you once a 15-minute candle is formed after 4 minutes. Dharmeshji, beyond pharma, I think I also wanted to get a sense on the overall macro picture. I mean, the IIP data that's also come in has not enthused any, fresh wave of strength in the, outlook on the economy as well. It's come in at a 10-month low of 1.5%. 3.5%. How would you really look at the economic data that's coming in, and because we're not getting a support from the earnings like you already discussed so far, the economic data is not also very enthusiastic at this point in time, and of course we have a global overhang at that point in time as well. So a three-pronged data points that are not very supportive to the move on the markets. How would you look at the economic picture panning out, sir?
See, Sakshi, I mean, for economic picture, we have to dissect into two halves. One is the bulk lifting by the government. And I think, again, the heavy lifting has to come from the government side, from the infra space, which is, I mean, slightly picking up, but not to the extent which should have been desired. So let's see how it pans out. And the other part is the consumption part of the Indian economy, which is again divided into two parts. One is the urban consumption, and the other is the rural consumption. So if you are speaking about rural consumption, I don't think the per capita income is going to rise this time around. And the reasons why I say so is because if you look at the farm production, be it rice, wheat, cereals, or pulses, they all, even sugar, they all are in pretty excess of what the initial projections were. And we are more of a surplus country now. Even for government of India has opened the entire rice segment for exports. So when such kind of a scenario arises, the prices eventually fall, which we have seen the food inflation last month around. It was a negative data around, and that doesn't help rural India per capita income to go up in a substantial way. So interest saving cost is one thing, but the actual income, I mean, that's a servicing part of your income. But total income, to our mind, is not going the way it should have gone up. So it's more of I mean, the inflation is low and it's a negative inflation for the vegetable prices. So that is a concern area. So again, we are left with no choice but the government to pump up the spending, and through that some private capex and capital goods may happen because of the China 1+1 factor also playing out. But that totally depends on the third factor which you highlighted, that is the global tariff, and how in the present scenario Mr. Trump is going to deal or position India, where one is Russia and the other is the China factor. So let's see. I mean, it's still wide open. The game is wide open as of now, and many evolving parts to it now.
Absolutely. Before we let you go, Dharmeshi, in your initial part of the commentary, you did mention that although these are negative signals, but you still have a buy on dip strategy that you're recommending to all the clients at this point in time. Where are you finding that opportunity in this weak market?
Yeah, I mean, the very reason for that is the equity risk premium has come down to around 1.3, 1.5. So that's the difference between the equity yield on Nifty 50 and the bond yield. So that has narrowed down, which provides a much needed support for the asking rate of growth coming down to 7-8%. So with having that perspective in mind, I mean, sector remains the same, Sachi. There has been no change in the stance, and the visibility also remains the same. You have to look for, defense companies in this fall, where in a stable and uptrending market, the returns will be far higher, and the numbers also flowing in. Renewable energy segment, which we have just talked about, that is also a promising sector. Railway infra has not been doing well. I mean, stock prices have corrected quite sharply. Say, for example, Ircon International kind of a company you should be looking at to build portfolio out there, where again the government infra spending comes into the play. And select, BFSI segment, because eventually maybe Q2 may be bad, but eventually there are certain pockets where valuations become very attractive with this kind of a fall, and with interest rate down cycle playing in. We are expecting Q3 onwards the credit growth cycle to pick up again going into the festive season. So that pocket is one other sector which one should be looking into value pick. Just do your due diligence before picking the stocks. So broadly, these are the 4-5 sectors which still looks very promising going forward towards the end of FY26.
Fantastic. Okay, Dharmeshi, thank you so much for taking the time out and helping us with all your
Thank you
insights
so
on the
much,
markets.
Sakshi.
It's always great to speak to you, and hope you have a great time. We'll see you soon, sir. All right, let's get into our conversation with Arpit now. Arpit, you must have studied well the first 15-minute candle. What are the key highlights for the markets? Do you think this uptick will sustain? I think that's the key question.
So actually, if you have to understand the behavior from last couple of weeks, what you're seeing that we see generally selling pressure on Friday and on Monday of the week, and then from next couple of days we see some bounce towards the Thursday expiry, and this being the
Okay.
monthly expiry for Nifty Bank Nifty. So definitely it would be an interesting expiry because we have seen a lot of action in last couple of days. So now talking about the level perspective, Nifty earlier we used to talk about 24,800 was a major support zone for Nifty from last couple of days, but last couple of days we have seen a breach of that and we have seen good selling pressure also. So now going forward, at immediate basis, 24,800 would be a key hurdle level. That would be a make or break level for Nifty for any decisive move. And generally, after a sharp fall, index tends to bounce back. So on the radar wise, 24,800 would be an immediate hurdle zone. At the same time, 24,550, 24,600 is a major supply zone. So today our view sense is that we can see some recovery from the lower levels, but till it closes below 24,800 levels, overall a stance on Nifty would be slightly biased on the negative side because 24,800 is a major hurdle zone. So 24,800 would be a key level. Now talking about Bank Nifty, so Bank Nifty was relatively resilient in last week. However, post that from last couple of sessions, we have seen a corrective move of almost 1,000 points from 57,200 to 56,000 levels. And yesterday was the offering posed by the Kotak Bank weak results, because of which we have seen good correction in Bank Nifty. Relatively, Bank Nifty is trading in a broader range between 55,800 to 57,200 levels. One interesting junction where Bank Nifty is at 50 DEMA, and Bank Nifty is after coming after almost 2 to 3 months, it is coming at its 50 DEMA. So I think 56,250 would be a key level for Bank Nifty. Any sustenance above 56,250 levels would change the stance for a positive bounce back move. Till then, a slightly bias would be still on the negative side. Though we have seen 3 to 4 days of corrective move in Nifty and Bank Nifty both, so definitely some bounce back can be seen. But the bigger trend, we have to keep keenly watch the levels for Nifty is 24,800 and for Bank Nifty would be 56,250 on closing basis.
Okay, got that. Let me quickly look at some of the other moving parts in the market. So most of the market breadth is now improving. Look at the key sectors. They've actually come up into the green. Real estate is now 1% higher. Remember, this index was down by about 4%. Yesterday, metals are half odd percent up. Oil and gas, autos, even the mid and the small caps are now improving in trade. Pharma, banking space also. Financial services and IT still reel under some pressure, but most of the breadth is actually coming into the positive zone. Let's talk real estate. The sharp drop of 4% yesterday that you saw and the recovery that we are seeing today, what do you make of it and what would your fresh approach on real estate be? You could also take some names here. We've been seeing multi-bagger stocks like Lodha continue to outperform, but after the earnings, we've been seeing softness on this space. What exactly would your approach be here?
Totally. And this time, what you have seen, the reaction post the earnings has been quite quick and quite fast. Irrespective of the trend of the stock, how it has been, it's very quick. So now talking about reality as a pack, obviously we've seen a good corrective move in last 4 to 5 days. But now first pack that would be looking on a radar would be Prestige Estate. So if you look at the chart sector of Prestige Estate from last almost 1.5 2 months, it's trading between 1,600 to 1,800 levels, and from stock corrected from 1,800 back to its 1,600 levels. So it's near its support zone. So definitely this market has been quite tricky. And if you look at the setup wise, 1,600, 1,590 is the major support levels. And if someone wants to play at this range between 1,580 to 1,800 levels, so Prestige definitely offers good risk reward opportunity and can go long at current levels with keeping sort of 1,580, 1,590 for a bounce towards 1,680, 1,700 levels. Apart from this, if we look at the chart sector of Lodha, so relatively the stock was in strong uptrend, but from last couple of weeks, if we have seen a decent corrective move from 1480 to almost 1200 levels. Today we have seen some pullback move, but important part would be here to say that we need a good closing on the daily basis at the end of the day, because so far what has been the structure, market tends to recover, but again at the fag end of the day it tends to lose its shine, and again the index drift lower. So Lodha also, if you talk about the levels wise, 1180, 1170 is a major support zone. On the upside, 1280 is a major hurdle level. So I think 1280 would be an important level to watch out for Lodha, and it's better to wait for some stability from a trading perspective. However, if someone is looking from an investment perspective, definitely it offers a very good opportunity, because the bigger trend of the stock is positive and it has corrected from the higher levels. So the risk reward is favorable, and one can go long near 1180 to 1200 levels with a positional view in mind. Going forward, definitely you can see some good upside.
Okay, got that. So I hope this is also giving you some sense. Let's look at some stocks now to take a view from Arpit. Arpit, F&O space, a lot of moves that can be seen. Tata Chemicals, Jindal Stainless, even the metal space, JSW Steel, that's also up in trade. Are you looking at anything specifically in the metals pack?
Actually, if you see overall metal index is consolidating. Generally, we haven't seen that underperforming sector so far. So if you look at the JSW Steel, though being a large cap, relatively it has been trading in a broadly in a channel from last almost 15 to 16 sessions. Today we have seen a good uptick of positive candle, but I think level wise 1053 would be a key level. A sustenance above 1055 would definitely open the move towards 1100 levels, but 1055 would be a key level, hurdle level for JSW Steel for an upside move towards 1100. And in fact, in the entire metal pack, JSW is relatively stable, where we see Tata Steel, Hindalco, Vedanta, and SAIL relatively underperforming. JSW is relatively strong with major support around 1020 for an upside move towards 1070.
Okay, fair point. Let's look at that too. Now, I'm going to be helping all our viewers to get a view from Arpit as far as some of the key stocks on the Nifty are also concerned that are on the move. Jio Financial Services has moved to the top spot now, 1.5% higher on this one, 312. How is your fresh approach on this one? Do you again think Jio is likely to continue to remain in a range, or do you think there is a fresh wave of momentum or a higher trading zone that we could now expect from Jio Finance?
So if you talk about overall the previous leg of rally from 280 to 333 levels, the stock was in clear uptrend. Post that we have seen a decent corrective move in last 14 days from 333 to again 305 levels. So interesting point, it has retested its previous breakout zone where the stock rally from 303 levels, and now the stock is again forming its base around 305, 306 levels. So from a risk reward perspective, it's at a good support zone with a major support around 303 levels. And I think slowly, again the stock can head back towards 323, 33 levels. So for our viewers, this level you have to play it out. From 300 to 330 would be the broader range. Immediate basis 305 would be the support level. And slowly, steadily, a closing above 313 can definitely pull back towards 325, 333 levels.
Okay, fair point. So that's about Jio Finance as well. Let me just quickly pull up a few names for all our viewers to see what's happening in the Nifty 500 basket. Where is the move coming in? Look at a Paradeep Phosphates that's up by 9%. Maybe this chart you could also track. Meanwhile, I'll just take the other names as well. Arpit, we have Go Digit General Insurance up on the move, 8% higher. You have Mangalore Chemicals and Fertilizers also higher in trade. Arvind Fashions is another one that's moving about 7-8% higher. Names like even Kelton Tech Solutions, which was so far hovering in the lower zone over the last couple of sessions, is seeing some short covering now, and it's also on the move on the higher side. Insecticides India is another one that's also on the move on the positive side as well. Those are some names that are actually inching higher in the Nifty 500 basket particularly. But Paradeep Phosphates, if we stretch the charts, let's pull up that stock. This has been on the move for some time now. Arpit, if you could just tell us on the charts, what have you observed, and what would your fresh strategy be after 36% of a rally in just last 1 month?
So if I look at the monthly time frames, the stock is in clean uptrend. It gave a monthly breakout in the month of April above 150 levels, and from there on slowly the stock is moving higher. If you look at the immediate price action, definitely you've seen a gap up opening of almost 9.5, 10%. But setup wise, if you see, its major support is around 205, 206 levels, and generally after a big gap up the stock tends to consolidate at higher levels, but the bigger trend is still intact. And after a huge gap up we have seen good volumes as well, so definitely the base of the stock has shifted higher. Initially the resistance was around 205, that would be a crucial support zone, 200 to 205, and slowly steadily as the stock is in life high territory we can see more upside towards 230, 250 levels positionally. So it's a clear buy on dip counter. Any dip can be bought into, or aggressive traders can definitely buy with keeping stop loss 205 for an upside move towards 235, 250 levels positioning.
You see Paradeep Phosphates at record high levels after strong performance in Q1. That's the key trigger for this fresh move of almost 12% at the open and now hovering around 9% higher in trade as well. In fact, the company's net profit has jumped by 47 times. That is 4726 percentage, so 4,726% on a year-on-year basis. That's the kind of margin that you're looking at in terms of growth for the company's profitability. That is now coming at 255 crores versus just about 5.3 crore rupees in the same quarter last year. That's the jump you see on the profitable figure. Look at revenues from operations in the April to June quarter, that is jumped by almost 57%, 58% odd to 3,754 odd crore rupees as well. Higher sales have resulted in the corresponding increase in the company's profitability too, and the EBITDA has more than tripled from last year as well for the company. We are also looking at the EBITDA margin now widened to 12.4% in the current quarter vis-a-vis 6.18%. So the margins have also nearly doubled as well for the company, and the company looks extremely strong on the charts as well. In the last 6 months, it's already rallied about 90%. In the last 1 year, the stock has given up 150% kind of a return to investors. But on dips, Arpit says one can still look at this stock on the positive zone again. Let's now look at what's happening on the key spaces within the markets, which we can point out. Okay, Trent is another stock that we could track from the Nifty stocks. Arpit, 5,033 for this one. It's been volatile of late, Trent, and if we also look at assessing, I think about a month back, we did this analysis with one of our reporters, Asim also, who did this entire research that of course in 2024, it was a star Nifty stock. It was the only stock within the Nifty that doubled investors' money. But look at this year, it's actually on all the parameters, it's given you a negative return this year so far. We're already about 7-8 months into the trade, but look at 6 months, 3 months, year-to-date basis, you will look at a decline on all the fronts as well. And right now, Trent is trading at 5,030. Arpit, what has changed for Trent? And would you still be as bullish on Trent, on this stock? Why I'm asking this is, last year, even many, top market experts and analysts, came on the channel and they said that this was a big miss for them. They missed on analyzing how far and how fast can this stock continue to multiply. This year, the stock has already come down sharply. How would you look at Trent? Is this giving you an opportunity, or would you let fresh levels or zones to now be seen?
So Sakshi, as we're talking from a bigger time perspective, one interesting data that I've seen. So I was looking at the yearly chart from last almost 12 to 13 years. The stock was in clean uptrend. On year basis, the stock has given return. And if it particularly talk about 2024, the stock has given the maximum returns in the year 2024. And post that, we have seen a very sharp, brutal correction in the counter from almost 8,000 towards 4,400, 4,050 levels. So from a monthly and weekly setup wise, definitely the stock is in pain. And generally after a such big up move in last 8 to 10 years, generally the stock tends to consolidate for next couple of quarters to couple of years time frame. So look at the from a perspective wise, definitely the stock that reach 8,000 levels, it will definitely some more years or some more quarters to reach to back to that levels. However, from a investment perspective, we would still wait for a better entry point. And looking at the setup wise, 4,400, 4,500 would be a good entry point where one can go long with a positional stop loss of 4,000 for an upside move towards 5,500, 6,000 levels. But look at the immediate time frame structure, definitely there is some pain and we would not be in the rush or to jump onto this counter. 4,500 would be a good entry point from a long-term investor perspective. On the immediate daily and from the daily weekly time frame perspective, definitely the stock is in weakness and better to avoid and try to catch the falling knife.
Fair point. Okay. First half an hour now out for you, Arpit, to really see the first half an hour candle and help us understand with 24,700 back on the screen, what will the trade pan out to be like?
Okay, so if we talk about Nifty, along with the Nifty, I'm just seeing some, after a long time, we have seen some good recovery in the broader market. So that generally sets the tone for the market going forward. From till last 3 to 4 sessions has been painful across the board. If we talk about Nifty, definitely some recovery seen from the lower levels. So from expiry, and today we have Sensex expiry also, that's a monthly expiry. So a sense is that Nifty 24,600 to 24,800 would be the band to watch out for Nifty. Along with that, for Bank Nifty, interestingly, where the banking index was correcting, HDFC and ICICI are holding well. and these two counters were relatively strong, outperforming. So whatever support has to be done from the Bank Nifty has to be done by ICICI and SFC Bank. Apart from that, other all counters are generally on a weaker side. So SFC, ICICI are the key counters to watch out for Bank Nifty, and we have to watch out for Bank Nifty 56,200 levels. For Nifty, definitely have seen some recovery from the lower levels, but as we discussed, 24,800 would be a key level to watch out for. On the immediate basis, 24,600 is the support zone, and our sense is that mostly after a sharp corrective move, index is likely to consolidate at the zones for at least for today's session.
Okay, got that. Let's also look at, what else is buzzing on the street. Nifty, next 50 names also let's pull up. Torrent Pharma is up in trade, 2% higher. IRFC is higher in trade. Hyundai Motors is also opening up. You can also see TVS Motors on the higher side. Bosch is moving. Auto ancillary names for you. Anything within this basket, Arpit, that we haven't discussed today? Do you think this is a positive space to look at?
If we look at the overall auto ancillary space, definitely it has been a huge space to talk about. But if we look at apart from that, talking about the core auto stocks as a whole, so I like to mention two stocks from the auto index that we have been quite bullish on. First would be the M&M. So if you look at the sector of overall auto index, where the index was in corrective phase, but you're seeing good momentum in the auto stocks. And if you talk about the chart sector of M&M, relatively M&M has been huge outperformer, though it is consolidating. But the good part is that it is consolidated at higher levels, near 3,100, 3,200 levels at life high territories. So as soon as we see in recovery in the auto index as a whole, definitely M&M would be a huge outperformer, and definitely the stock can head towards 3,600, 4,000 levels with a 6 months to 1 year perspective. Now talking about overall ancillary space, if you talk about Sona Comp particularly, generally, if you look at the chart setup of Sonacom, relatively it is still stuck in a range. So I think from a auto ancillary space, a lot of counters are still stuck in a range, and will wait for a better trade setup if we can see across the sector. However, from the auto pack, M&M would be a preferred pick that can definitely scale new record highs as we see momentum in the auto index.
Okay, fair point. I hope this has also given you some understanding there. All right, Arpit, we'll thank you then on that note for being with us on the morning edition and helping all our viewers out with a viewpoint on various sectors, stocks, and the overall strategy on the markets to be followed as well. Appreciate your time. Thank you so much for being with us on the morning edition. Right now, viewers, about mild 4-5 points of an uptick on the Nifty, 24,686. Let's see how this really pans out in trade. Of course, you also have a lot of moves to track even in the primary market space beyond the secondary market, viewers. Today it's Aditya Infotech's IPO that's opening up onto the street as well. 500 crore rupees through fresh equity, and another 800 crore rupees via the offer for sale is what the IPO is looking at garnering from the street today. And the promoter's stake will fall to about 77% after the IPO from 95% as well. That's the new IPO that you could be looking at. It's from the space of CP Plus as the company that it's a subsidiary of, and we're finally seeing a lot of homegrown security, video security services that the company really looks at. Remember, we are also given to understand that the company aims to raise these funds as the new regulations are expected to benefit the Indian manufacturers within this space as well, to show revenue growth. A recent acquisition that's also boosted the company's net profitability. The company's valuation and the market position also suggests, most of the experts believe, that it's suitable for the long-term investors. But in case you are looking at more details, then stay tuned. Throughout the course of the day, we will be speaking to a variety of experts to help you understand, and from the brokerage houses takes as well, as to whether this IPO really suits your portfolio. Remember, it's going to be an IPO rush. 5 IPOs are opening up this week alone for the investors to really choose from the main board category, and we will be helping you all understand from the top broking spaces too. So thank you so much for being with us on the morning edition. Do stay tuned. Up next will be earnings conversations, and of course at 12 noon I'll be back with daily calls to answer all your stock related queries. So thank you so much for joining in. I'll see you then.